Hello and welcome to Vox Markets. I am John Human and I am joined today by Craig Martin of Dynam Capital, manager of the Vietnam Holdings Investment Trust. Welcome, Craig. How you doing?
Thanks so much for having me.
No problem at all. We're going to talk about the year that Vietnam Holdings has had and sort of the general backdrop in the country. Now it's been an up and down year around the world. It's been no exception in Vietnam. But let's perhaps start with the good news away from the markets, and that's the country's economic performance, which seems to be back on track, back to its 30-year trend, and sort of seems to suggest the long-term prospects are still very much intact.
Yeah, look, I'd agree. Absolutely. It's we're looking at kind of 8% GDP growth for the full year. So that, as you say, that kind of 30-year track record, and 6.5% for next year. The country was very quick to get back into full production after the pandemic at the beginning of the year. And we've even seen a lot of domestic tourism start to flow back in. And the country hasn't been hit as hard, perhaps, as the West in terms of inflation. Partly that's because it's kind of self-reliant for 50% of its energy needs from kind of renewable energy and natural gas. So that's been good. And also isn't as directly exposed to the war in Ukraine as perhaps the rest of Europe and the world are in. So yeah, no, the macro position's pretty strong and robust.
So really, what's been driving that? I've been looking at some of the sort of economic data coming out of the country. As you mentioned manufacturing, but we're seeing expansion there. Retail sales on the up again. You've mentioned tourism, which to my mind would be extremely important for Vietnam. What's really pushing that really strong growth?
Well, it's a number of things. In part, as you say, it is that shift to more manufacturing in Vietnam from places like China, manufacturers moving to Vietnam. But it's in part due to a more broader trend of Vietnam cementing its kind of position, its overall role as a key manufacturing hub, an industrial center, and a friendly part of the world for people to do business in, and therefore a friendly part of the global supply chain. And trade this year is expected to be close to $700 billion, which is a record. That's more than twice Vietnam's GDP. So it's one of the most open economies for trade on the planet. So in part, it's that foreign direct investment, which is coming in to be the enabler of that manufacturing for export, and foreign direct investments at a record level this year. So that's part of the growth driver. The other thing not to forget is the domestic story. It's a big country, 100 million people, and they're consuming local and branded goods. So that's a driver for growth, that kind of consumer retail story. You mentioned tourism. It's starting to recover. I think in the US, if you search for places to visit, Vietnam was the second most searched or sought for destination. But we've also seen domestic tourism at record levels, 100 million domestic travelers within Vietnam this year, way above the target for the entire year, way above pre-pandemic levels. Now, for international arrivals, they're still low, although the country opened up in spring of this year. International arrivals are probably only 3 million or so. Normally it might be 20 million. So we're not seeing Chinese tourists for obvious reasons. And it's starting to pick up around that. So these are the two key legs. You've got the domestic story, and then you've got the manufacturing for export, the kind of global supply chain story for Vietnam.
Interesting. And interesting you mentioned China, because obviously we'd obviously heard a lot about and we've spoken before about the shift of Western technology brands manufacturing in Vietnam. That seems to have gathered pace since we last spoke. There's been a lot more news coming out of big manufacturers shifting. Is that something you've seen through your portfolio companies?
We've certainly seen it through the country as a whole. One of our portfolio companies is in logistics. So it benefits from kind of inter-Asian trade as well as global trade, seaborne freight as well as air cargo. But we're also seeing a change in the kind of mix of Vietnam's kind of exporting story. It used to be garments and textiles and shoes and what have you, which it still does. But we're seeing more of a kind of digital part to that story. Still early days, so there's plenty of runway left, but this kind of digital technology, digital investment is a bright spot, I think, for the economy. It's generated probably close to $150 billion of revenue for Vietnam this year, which is up probably 10, 12% on last year. So over the last 30 years, the kind of export base from Vietnam's been a little bit more value add, more technology, and it's getting some of that from China and some of that from North Asia. But it's often still been kind of assembly, packaging, and test. It's a big smartphone manufacturer. I think more than 20 million smartphones a month are produced in Vietnam. Half of those made by South Korea's Samsung. So that's a big business of assembly. But it's starting to move up the value chains. Intel, they've doubled down. They've got about $1 billion investment, which they're doubling in Vietnam in what they call semiconductor assembly and test. Samsung, they've got about $20 billion invested in Vietnam, and they're adding another $2 billion or so. And some of that is for kind of semiconductor or integrated circuit manufacturing. So there's a little bit more of this technology. And then within our portfolio, we're seeing benefits certainly from that technology perspective. FPT, our largest position, it's a digital champion, both for the domestic market in terms of cloud services and helping domestic companies get their IT house in order, but also providing services as an export to global companies. And it's been compounding its earnings at more than 30% for the best part of a decade. And as Vietnam starts to export more software and digital products to kind of complement the physical Adidas and Nike shoes and garments, all those kind of things, it's starting to account for maybe 5% of its exports, and now these digital goods. And FPT, our portfolio company, contributes about $2 billion of those exports a year. So it is a fast-growing area. There's one other side where Vietnam's starting to kind of punch above its weight, and that's in electric vehicles. And one of the largest conglomerates in Vietnam has made a significant commitment to invest in North America, investing about $4 billion in North Carolina to build electric vehicles and sell them in the States. So it's selling them in Vietnam, and it's now looking to export them, and it's actually looking to IPO in the US. So this growth in manufacturing for export and increasing technology and moving up the value chain could be epitomized by a Vietnamese company IPOing in the US, perhaps in the early part of next year.
Absolutely. It sounds like, technology, that value add behind it, increases the wealth of the country. It also increases the intellectual capability of the country.
Yes. Yeah, they're investing a lot. So FPT invests a lot in STEM, science, technology, engineering, and maths. Has 60,000 people it's training in any one year. So education is a key part of its business, which is another reason why we love the company so much. But also domestically, that e-commerce enabled by smart Vietnamese graduates in these kind of companies. E-commerce is growing rapidly. One of the fastest growths in Southeast Asia, more than 37% per annum growth. And that digital economy is going to be worth maybe $60 billion in a couple of years' time. So it's exciting times, and technology helps countries like Vietnam continue to kind of leapfrog and get further ahead.
Yeah, it's quite interesting. So, obviously the shift of some of the manufacturing from hubs in China to Vietnam has been well documented. But it sounds like so two things. China's opening up again. Obviously, it's had a massive economic impact there. Yeah. Are you concerned that actually the sort of shift to manufacturing to Vietnam slows as a result of China opening up again? Or are you confident that actually this is no longer a sort of a race to the lowest cost producer? It's about the expertise within the country and the security of the jurisdiction.
It's a great question, and we kind of look at this every day. We're kind of pulling the different dimensions to it, because as you say, you've got when China was shut, Vietnam was exporting a lot more to the US. It took some market share from China. Some of that is kind of frozen factories in China, and some of that might rebalance. But Vietnam trades a lot with China, the bilateral trade of imports of goods and exports of semi-finished product to China as well. So when China's firing on all cylinders, I think that's good for Vietnam. I think one of the shifts to Vietnam is perhaps of a longer term nature, and it's not so much because of the COVID situation in China, but it's more around geopolitics. Perhaps the West, particularly the US, is kind of frightened that China is going to eat its lunch, breakfast, and dinner. And it goes back to the trade tariffs that Trump put in 2018, which WTO have now said are illegal. But this kind of moving stuff onshoring and nearshoring, and there's this term friendshoring. which is, it's hard for a country like the US. Well, perhaps the US is a bad example. It can do everything itself, at least it thinks it can. But for Europe, it's hard to do everything in Europe. So you want to find friendly partners to do your outsourcing. And Vietnam very much is that. With the EU, it has the EU Free Trade Agreement. It's got the UK bilateral free trade agreement. It's got the RCEP, these regional trade groups. And so that makes Vietnam still a great place to manufacture. Yes, you mentioned labor. It still has that labor arbitrage against China. It's cheaper than China. It's cheaper than India for technology as well as for manufacturing. So it's a very complex picture. And if, globally, there might be softness in the economies next year. And so that might impact exports from places like Vietnam. But I think its position and the way the government's trying to position it in the global supply chain, this is, a 5-10 year story that we're going to see continue to grow and develop.
Interesting you mentioned electric vehicles a few minutes ago, because before we sort of look at the market itself, I think probably let's stick with the economics and some of the drivers there. In your last update, you focused very heavily on the messages coming out of COP27, the climate conference in Egypt, and the potential impact on Vietnam, where I think there's a commitment to phasing out coal generation by 2045 as part of the net zero plans. And you talk about explicit risks and enormous opportunities. Can you sort of tell us what they are and how Vietnam sort of manages to avoid some of the mistakes that have perhaps been made in this transition that we've made in the West?
Well, it's a great challenge. So, as you say, last year, the Vietnamese Prime Minister was in Glasgow in the summer. He wouldn't want to be there in the snow, and committed the country to net zero by 2050, as you alluded to. But he emphasized the need for international cooperation and help and assistance in that. And we saw some element of that at this year's COP27 in Egypt, because in Vietnam, coal is about 50% of its energy mix, and it will peak in the 2040s and needs to be eliminated or reduced significantly to get to net zero by 2050. So that means Vietnam's got to add something like 200 gigawatts of renewable power and lower carbon energy sources to meet its needs, which are growing, by 2050 if it's to be net zero. So this provides enormous opportunity, clearly in renewable energy, in LNG, in potentially green hydrogen, and all of these exciting areas. That's the opportunity. But there's risk, and there's transition risk. So new coal plants, which are being built today, will need to be decommissioned early. That needs financing. ADB is starting to do this in Philippines and Indonesia, and maybe that's something they'll look at in Vietnam. That costs money. But more tangibly, the risk is climate, and the country's got 3,200 odd kilometers of coastline. It's quite low lying around the coast areas, and is exposed to rising seas and the effects of climate change. So it's not just a theoretical exercise. There's a real issue that Vietnamese people are aware of, because they're seeing their environment at risk unless things are done to improve the situation over the longer term. So there's opportunity in that push for lower carbon economy and massive continued push into renewable energy. But then there's how to definance these coal-fired power plants and deal with resilience and transition risk to protect the economy from whether we end up at 1.5 or more likely 2 degrees increase by the time we're at the end of this century.
No, it's fascinating, and I mean, for a country like Vietnam, you say it's more. It has to be more than just lip service because of their exposure to this. So I mean, you mentioned also in that report that ESG is something you, as an investor, focus on, and that is something you're helping your portfolio companies through. So ESG has been criticised and often rightly so. Yeah. Why is it something you're sticking with? Why is it so important to your investment approach?
Well, we've been at it a long time, and beyond the kind of existential reasons and the moral kind of ethical reasons that people kind of attribute, for us, there's also very practical considerations that drive our engagement from an investment perspective, and our engagement with our portfolio companies. Firstly, you look at Vietnam, there's 1,600 public companies, and we want to select 20, maybe 25 of those in a concentrated portfolio of great businesses. And so having our kind of proprietary screening model and tools that we use to evaluate companies and rank them helps us filter out, I suppose, the good from the bad and the great from the good, and the great go into our portfolio. But secondly, we recognize that no company is perfect. Companies are on a journey of ESG, environmental social governance, and we're helping them navigate that journey. We think that the companies in our portfolio, if they can show improvement over time, they'll be worth more in investors' minds. So we're very hands-on with a couple of our top holdings. We've really been helping them hold their hand as they look to, we call it do more, measure more, report more. That's our mantra, and that's what we're trying to inculcate with some of our portfolio companies. In fact, one of them is a jewelry company, fantastic business. It's got half the market share in the modern trade brand jewelry. They've acknowledged our help recently in building their own ESG framework, and they're becoming one of the first companies to really report on how they're improving their sustainability strategy to their public investors. And this business has grown from about $100 million 12 years ago to now close to $1 billion of market value, compounding its earnings by 25% or more each year. And we think as it gets better known with foreign investors and known as a good high-grade ESG compliant company, it will see a better valuation, re-rating by foreign investors. So many points to ESG, and it's very easy to throw the baby out with the bathwater. But I think fundamentally for us, it's about active engagement with our portfolio companies, nudging them along, helping them to do more, measure more, report more. And over time, we think that will translate into these companies getting better rewarded. And for investors in our portfolio in Vietnam Holdings, seeing the net asset value and the returns increase.
Yeah, it does seem to be the general direction of travel, and makes a lot of sense.
Exactly.
So let's talk about your portfolio and sort of the markets more generally. So the economic backdrop is still incredibly positive, despite what is still, it has nevertheless been a difficult year. But Vietnam hasn't been able to, the markets haven't been able to escape the broad inflationary-driven sell-off. What do you think potentially helps the Vietnamese market get past this? It's got exposed to lots of interest rate sensitive sectors, real estate and banking in particular. But are there other specific factors that have dragged on the performance of Vietnam as a market?
Yeah, so look, there's been two forces. One's the global force and the weakness, perceived weakness in the rest of the world, and nervousness. And Vietnam in the last couple of years has got 5 million new investors, and they're nervous. So this year they were selling after last year's terrific growth. But then there's a domestic issue where the government in May this year, the Prime Minister said, in New York at the stock exchange, he rang the closing bell on the New York Stock Exchange and signaled capitalism's good and we want investors in our stock markets and our capital markets. In the same week, they removed the head of the stock exchange for failure to supervise, and they threw a few bad actors in jail. And then in the autumn, a couple of months ago, they arrested a real estate mogul, a player in the real estate market, and that spooked everyone. And coupled with some kind of clarifications, restrictions on how bonds are issued by companies, we've had a little bit of a credit freeze for some of these real estate companies. So that's exacerbated the fall. So this year, the Vietnam market broadly is down about 38% year to date. Now, Vietnam Holdings is an outperformer. We're only down 30%. Last year, we outperformed again on the upside. So this year, we've outperformed, but in a falling market. So what does that mean going forward? I think it means two things. One is you've got to be on the ground, which we are, selective, building concentrated conviction calls around these companies, but also recognize there's great buying opportunities. The market's cheap. It's at historic low levels, kind of 6 to 7 times, 6.5 times price earnings for 2023 across our portfolio. We haven't seen that for a long, long time. And yet in our portfolio, we've got companies that are growing at 20, 25% earnings per share growth. So you're getting good growth and you're getting it on a relatively cheap valuation. So yes, it's been a very bumpy, volatile year. November as a month of two halves. The first half was very negative because there's a lot of domestic fear. But then there's a realization that perhaps in the broader investor mind that, stocks are cheap. So in the last couple of weeks, we've seen about $1 billion of money flow back into the stock market. And so we could be shaping up for what's known as, I think, as a Santa rally in the West. So it's an interesting time in the markets. And so we're looking at names that we know well. We can add a little bit more money to at historically cheap valuations.
Yeah, so you're not changing your investment style. You're not changing your sort of sector approach. You're just topping up where you think there's a valuation opportunity.
Yeah, look, our size as a company, as an investment fund, means we can be really nimble. So we trimmed our sails as we were perhaps heading into some headwinds, if that's the right nautical expression. I was not much of a sailor. But that meant that we could reduce, actually, a few months ago, our exposure to real estate and a little bit to the banks. We were below the index levels in both of those sectors, increased our cash, and then we were able to deploy that kind of dry powder back into market names we know well at low levels. And that's helped drive our outperformance. So say in November, we outperformed the market by about 4%, and year to date, we've outperformed the market by about 8%. So yes, you need to be patient, but you need to be nimble, and you also need to be kind of really focused, we think, on a few really good companies, and get to know them really well, and find those companies that are going to be positioned for the longer story in Vietnam, as it generates this position as kind of global manufacturing or industrial hub.
Yeah, and it's a long-term story that's a very attractive one. Lots of potential there. Thank you so much, Craig, for your time this morning. It's been absolutely fascinating talking to you again.
It's been a pleasure. Thanks ever so much. Keep safe.